I had a really good, very frequently asked question come up in our chat room this morning, and I thought it was about time I make a video on this. The question is, how do I know when to engage with the market and when to sit out and not do anything? So another way to ask that is, when am I actually looking to place a trade, and when am I free to go take care of other things in life and go do other things? And it's pretty simple. It all kind of starts with my trading plan. I'm a level to level trader, so I do analysis on higher time frame charts, and I have videos on that, so I'm not going to go into extreme detail on that, but basically I'm finding levels and doing analysis on the macro level charts, the weekly, the daily, and the hourlies, to find these major levels of support and resistance. These levels that are on my chart, it looks like I may have marked them today, but these levels have been on my chart since Monday to even a few weeks ago when we had the index rollover. And because I get them on a higher time frame and then come down into the intraday time frames, this is a 5-minute chart. I may also use a 3-minute or a 15-minute, but in general, I'm looking at analysis on the higher time frame chart and then coming down to a lower time frame chart to trade it. And the way that my trading plan works as a level-to-level trader is I'm literally just waiting for the market to come to me at one of these predefined levels, and then I can look for a price action setup where that'll give me my entry and my stop loss, and then I can target these other levels to actually make a profit on my trade. But I don't have anything to do between levels. So I'm literally waiting for the price action to come to me at these levels to engage in the market. That means if we're chopping around between a level, there's nothing for me to do here. Either I'm already in a trade or I'm waiting for the market to come to me at one of these levels. The nice thing about that is I can just put an alert on one of the edges of, on the inside or the outside, whichever side I'm waiting for price action to come down to. I can put an alert, right before we get there, so that'll get my attention if I'm out on a walk or doing laundry or whatever, to come and pay attention to the chart and see if I can get an entry. So when I'm talking about an entry, that's another thing that I have a lot of videos in my library that I'm working on building for y'all. But once we get to a level, then I'm looking for either a reversal or a breakout. So there's little ways, there's little tricks that you can look for in the price action where we're actually getting a break of this level or rejecting off of it, and using those trades that have been proven over back testing is where we get our edge and the probabilities in the market. So there's two ways that we're doing it. We're waiting for the price to come to us at these levels, and then we're using proven price action strategies to actually make our entries and our exits, and most importantly, the stop loss, because these levels will generally be my targets. But that's literally how you know when you can do something and when not to. And I have this chart up over here also because this is a daily chart, and this kind of also helps keep me out of trouble a little bit. I know when we're at the edges of the market where we're naturally going to go, and these are this is a 3 ATR Keltner channel, and this is a 2 ATR Keltner channel. And statistically, this is generally how far the market will go before it needs some sort of relief in either direction. So I also know that once we're at these extremes, I'm not necessarily looking for a continuation. That's not the safe trade. I would be looking for something to bounce off of in this ATR range. Same as when we come into the median, and same as when we go on the other side of the range, other side of the ATR range. These are all areas where I can kind of find some safety in making sure that whatever I'm doing intraday is supported by this more macro thing. Because then we kind of get in here and you see all this chop. This is the same thing. We're between these ATRs. This is a 21 EMA, but we're between the EMAs and these ATRs. And so this is a choppy area. This is an area where I know that we're not as likely to have full continuation and get a big trade until we're coming through here. So the way I can kind of translate that into the market is the last couple days I was kind of expecting a big move because we were down in this 2 to 3 ATR range, and that gives us a lot of room to the upside. So when I'm looking for an upside trade, I know that I can maybe look to have some trailing runners and things where I can stay in the market a little bit longer. And when I'm already in a trade, I'm not looking for a trade. So that's another thing that helps keep me out of trouble too. But like I said, when we're just either ripping through a level or chopping between, there's nothing for me to do here. My job right now is to sit and wait when we're in these zones. It's when we actually start touching these levels and engaging with them that's where my trades will be placed. And this is kind of related. So this is the price action today, and we did have data this morning. So one of the trades that I'm looking for on data is a retracement. And I really like to watch for the retracements into these golden pockets, especially off of this midpoint from the data move. All I did is take a fib from where the data candle started when the data was released to when it started settling down, which since it's at a level up here, I kind of favored that wick up there. And then I'll kind of look for a retracement. Since I didn't get this retracement, there was nothing for me to do here. Until I get down into here with this morning. I was hoping this morning was going to pull us down into here so I would have a trade, but I didn't. So there was nothing for me to do there. I was able to engage with it kind of up in this area, but again, I'm literally waiting for these moments. And this isn't even a great example today because we had this dramatic volume, or this dramatic data. So I'll kind of pull back and show you what it looked like over some other days. If you follow me at all, you'll know these, I mark ranges that I'm watching with these pink boxes. So I was watching for us to either break out of this range, which we never did. You can see we kept kind of getting these little false breaks and wicks. So I could potentially have a trade here to come back down to this other range. But in the middle, I'm not messing around with this stuff. I have my VWAP on here for trend, and sometimes I'll use a moving average. But in general, when we're between in this mess, unless I'm already short from this level, there's nothing for me to do until we come down here. So in this area, I'm either in a trade or I'm on break. And there's another kind of trick I watch too. So this, I'm just kind of watching the volume. This is a 15-minute chart, and each one of these lines is showing us where the days were. And you can see we've got these surges in volume when we have data, and then we have surges of volume when the market opens, and then volume starts to drop off. And some days this is more dramatic than others. You can see on this day over here, we had a lot of volume early in the morning pushing, helping move these candles down, but then it disappeared. And price action gets a lot more less predictable, I guess the way I should put it, when we have lower volume. When there's fewer participants, their orders have a greater effect on the market because of how that relativity works. If we have a lot of people participating in the market and a lot of orders, it's harder to get the prices to move up and down where we have clusters of orders. As opposed to here, this would have taken a smaller order to cause this bounce here than it did over here. And the effect of that is a lot of our market knowledge is just kind of less reliable because we can get these kind of major reactions off of not very much. And that's kind of what was happening over here. This is choppy to me. This is where the trade was. There's a couple little entries I can see. If we had levels here, we definitely could have found shorts. If we missed this short, could have found a short down here and potentially another short down here. But then once volume drops off, I can leave this alone. Even though this made a decent move, I don't need to participate in this because this is where the meat and potatoes of my trading plan is. Here and just anywhere that I have a level, really. I know I have a lot of Firelines traders following me, and whether you're using the Firelines or support and resistance or pivots, however you're getting your levels, I just wanted to show you another example. It's the same idea. So we can potentially look to engage with the market at this level, but in here, we're literally just waiting for something to make sense. We're waiting for an entry because there's no entry when price action whips through these levels like this. Up here, we come to a level, there's some, because we're at a level, we have some price action happening and we can find some plays in here. This is a little bit choppier again. This was our data move, and then this was the market open. So at market open, we did break, hold, and then we got a little bit of a go. Because we are so extended, and this is another thing I wanted to pull the fire lines up to show you, because we've made such a large move and we've already hit so many targets off of this break, price action gets unreliable when we get up to these massive targets up here. So this is another reason to kind of stop engaging with the market when you've already run through a massive amount of targets. Price action becomes less reliable to be able to use as entries. So if we go back to yesterday that I just showed as an example on my level chart, this is how it looked on the fire line. So we have a way that we can engage with it up here, possibly. This was off of data, and then so we probably wouldn't since it's data. But then we have another opportunity at a level here. Since this never makes it up to this full extension, there's still a lot of opportunities to play off of this second level here, and then we get another opportunity here. When we start, when we're in these lower volume conditions, we end up with these drifts and these drops. And this is what's really frustrating when you're a new trader. And this worked out where we had the break, it went up to the first, and then it got a drop. But when we have lower volume conditions, you have to be more aware of things like that. And sometimes I'm up for that. I'm feeling more aggressive. And sometimes I don't want to deal with this nonsense. And so if I've already made money up here, I don't need to engage with the market down here. And that's another little point too. So this morning I trade multiple portfolios. I have my futures portfolio, and then I also have some options and equity portfolios. And I had placed a lot of options bets when we were down here. I bought a bunch of SPY calls when we were down in this 2 and 3 ATR range. And my main target is here, and then my runners are going to be up here. So I was pretty busy managing and taking profits on my options portfolios this morning, and they're all looking really, really good because I'm euphoric from this trade. This trade worked out really, really well, and I'm feeling really, really good about it. That's another reason that I'm not really itching to engage with the futures market right now. So that's actually another important point too. I think when you are when you just take a big profit, you're feeling really high, and you might be feeling a little cocky, honestly, and you feel like whatever trade you're going to do is going to work out, and you might take some trades that you wouldn't otherwise take. You need to be really careful when you've when you've hit your big target and we're able to take big profits on a trade. That's usually not the best time to re-engage with the market. Doing my homework so I'm prepared for the trading day and then waiting for the market to come to me is how I am able to stay out of the market at the right times and in the market at the right times. So I hope that helps you, and let me know if I can help you with anything else. Have a great one, y'all. Love you.